following is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. Now, Larry Pesavento.
Okay, looking good, Billy Ray, feeling good, Lewis. Let's take a look here at the German DAX. As you can see here, we made a really nice three drive to a bottom pattern. That was all part of the things that we talked about yesterday, that there was a strong probability we're making a bottom here in the stock market. We've had a 300-point rally off the bottom last night. Whether that'll hold or not, I'm not sure, but I think it's got a pretty good chance. Anyway, let's take a look here at the FTSE. You'll notice that it's had this big drop down and made a double bottom back in March and has held so far. So all of that lines up pretty good. At least from what we're looking at as far as major support coming in. If we take a look here quickly at the E-mini S&P, which you can use to cash if you like, but you'll notice that we came within a couple of points of the exact 61% retracement of the March low. Now, we made the three drive to a top up there at 29.49. We dropped about 10% down into this level here, where we are right now, and we had a pretty good rally. We're trading at around 27.75 so far this morning, so we should be looking at a little bit of a rally. But what we need to do right now, boys and girls, we're going to get out our little books and we're going to take a trip down memory lane. What I'm going to do now is to bring up this is a page from my book, from Astro Cycles, The Trader's Viewpoint, that I wrote in 1987. I wrote it in 86 and 87. But what I had done is I had been a guest at FNN, the Financial News Network down in Los Angeles. That was Channel 10 cable. It was all day long business stuff, and it had guests from all around the Los Angeles area, and I happened to be a very good friend to the man who owned it, Glenn Taylor. And Glenn Taylor, his main squeeze, who he was living with at the time, was none other than Sue Herrera of CNBC, and Bill Griffith was there, Ron Insana was there, got a bunch of other people too, but what was the guy's name? Oh shucks, I can't remember his name. Oh, and he was such a nice guy. He was a reporter for the LA Times, and he would come on all the time. I'll think of it in just a minute. He was a senior citizen at the time. Well, I had written this book about Astro Cycles, and Bill Griffith had a really strong interest in cycles. And so they would have me on about once every 3 weeks. I would drive down from Pismo Beach, usually with my daughter, who was the 16-year-old, 17-year-old, so she wanted to drive on the freeway. So we would go down, and I would be on the show with about a half-hour segment and go over some things on astrology and some technical stuff. And it was a lot of fun. Enjoyed it very much. But this particular time was in August and September of 1987, and what I had told Bill is the fact that we had made a major top in the stock market with that 5-planet conjunction, also known as harmonic convergence, and they were all in the sign of Leo, and I thought that was going to be a major top, and I told him I thought we would see some type of a major crash in the stock market, not 29 style crash, but just a major bottom in October of 1987. I didn't have the exact date, but what I was on twice, I think. Arch Crawford was on with me once. But anyway, the main thing was I told Bill to buy the October puts. And what we did was, the reason why is that we thought that bottom would probably come in around the 16th of October. So buying the October puts, which expired on October 16th, was a good thing to do. And fortunately, the stock market rallied from late September, right at the equinox. It rallied into October the 2nd, which there was a major astro point, a Fibonacci cycle of Venus and Uranus. And that's where we thought they were going to go, and they turned out to be pretty good. Now the October puts expired on Friday, October the 16th, and you know what happened on Monday, October the 19th. Well, the puts expired on October the 16th with the Dow Jones down 106 points. That was a lot when it was only trading at around 2,600 and something, so 2680 or something like that, and it was down 100 points that day, and so the puts expired right on the bottom, and they were very, very profitable. Had we had November puts instead of the October puts, it would have been 200 times more. That's how, if you could have got executed, and that was a big question of whether you could have got executed on the 19th or 20th, because the market just totally dried up. Anyway, that's what happened, and the reason why I'm bringing you up, boys and girls, here we are. How many years later? 87. So here we are 31 years later. Let me see, 87. Yeah, 31 years later, we're looking at something very, very similar to what we've got going. I think what's going to happen between the 15th of October and the end of the month, around the 24th, 25th, I think there's a new moon or full moon. Yeah, there's a full moon around the 24th, and we'll certainly want to take a look at, I'm sure we'll have Norm Winsky on at that time, but there is a real interesting situation, very similar to this, that happens between October the 15th and the end of the month. So let's keep an eye on that. If you have an interest in this, contact TFNN and become a subscriber for the 24/7 letter, and then you'll have that information, and we'll see. I'm not going to talk about it anymore on the show because I don't want people sending me emails and things. No, it was not Dan Dorfman. I'm trying to think of his name. Gosh darn, I'll think of it sometime during the show, but gosh darn, what was his name? Boy, all those people, I guess I could call 20 minutes. Ed Hart, thank you very much. God bless you, Mr. Z. I see it in there. Yeah, it was Ed Hart. Very good. Yeah, Ed was he was a reporter for the full moon is on the 24th of October. Yeah, Ed was just a super nice guy, and I did several interviews with him. And yeah, Mr. Z's incredible. You flat got that right, Peak. He knows it all. I really appreciate it, John. I had a momentary lapse of having more and more of those as I go through, but we'll see if that's going to occur. Now, I did want to mention one other thing. When I put something like this in the newsletter, this is basically from one of our friends across the pond who does a lot of work on sacred geometry and stuff like that. But what that was is it was very similar to what Jim Bartolioni does, only Jim does it a little bit more esoterically. He uses circles and squares of radiuses and all this other stuff, but you'll notice that they came up with pretty much the same type of a thing. So this all, it's a question of, how much effort you want to put in it and not being able to see whether that's, to see if it's going to work or not. So what you really have to do is, what's going on. I was never on the Lou Dobbs show, even though I was interviewed by him once when he first got started. But anyway, we'll move on here. That's it. We'll take, we'll be right back.
The TAS Profile Scanner Plus, developed by John Logan and his team, is a standalone piece of software that can change the way you trade. Let the TAS Profile Scanner work for you by scanning over 5,000 financial instruments such as stocks, ETFs, commodities, futures, and Forex. Right now, you can get a 30-day free trial to the TAS Profile Scanner Plus right at TFNN.com. And when you sign up, you gain instant access to John Logan's most recent webinar, How Price, Volume, and Time Make Market Profiles So Unique. This hour-long webinar with John Logan will walk you through the most powerful features of the scanner and how you can use it to become a more successful and profitable trader. You pay absolutely nothing for 30 days while you try out this software risk-free. For more information on the TAS Profile Scanner and to get your 30-day free trial today, visit the front page of TFNN.com.
Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance, David White's daily market letter, gives you trade recommendations based on David's proprietary power law vector indicator that put the odds of success overwhelmingly in your favor. He'll give you the entry price, price target, and stop price for each stock and option trade. David combines his years of trading experience along with his background in technology and computing to offer his subscribers his take on the markets on a daily basis. Every trading day by 9:30, David publishes his morning issue of The Path of Least Resistance, along with updates sent out throughout the week whenever there is new actionable trading information. All new subscribers receive a 30-day, no questions asked, money-back guarantee. To sign up for David White's daily trading newsletter right now, visit the front page of TFNN.com and you'll find The Path of Least Resistance under Trading Newsletters. TFNN has launched our brand new website. You can still visit us at the same TFNN.com URL, but when you do, you'll see a new and improved homepage with a much simpler navigation, whether you're watching Tiger TV live in high definition or just accessing your newsletter subscriptions. We even have new pricing in 6 months and yearly options. Check out the new TFNN.com now and experience all the upgrades. TFNN.com, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Okay, folks, we're back, and I posted the chart of the Dow Jones E-mini, and you'll notice that it also made that 61% retracement. What we were looking at, of course, yesterday was the fact that we were having some 3 drive patterns on the 15-minute chart that was giving us some indication that there was going to be a bottom coming into the market, and we're, of course, getting some type of a rally today. How much it's going to be, we'll have to wait and see. Now, one of the charts that we discussed last week, of course, was the, let's get this up here to take a look at it, was the Nikkei. We had the big butterfly pattern up there at the top at 24,400. We got down to just under 22,000 so far. That's a major pattern in there. Whether that's going to be whether it's going to turn from here or not, we don't know, but we'll see what type of a rally we're going to get if we do it. Well, we are getting one, so that's neither here nor there. If we take a look at what the VIX index has done, I mean, you consider. You're absolutely right. We're talking about baseball in the Tiger Den, folks. We got a lot of folks from Boston and New York and stuff, and they're talking about Tommy John, who's from Terre Haute, Indiana, and Louis Tiant. I remember Louis Tiant, and he was one heck of a good pitcher. God, you never knew where he was going to throw the ball. Tommy was real easy because he had the ball over the plate. His fastball was only about 85 miles an hour on a good day, but he had a great slider and curve and terrific control. You might not, well, you would, I'm sure you don't know this, but when he played for the White Sox before he came to the Dodger, the manager had a deal with him. Anytime he got 9 players of the 27 outs to ground out, Tom got a new suit. And if you go back and look at his statistics, he was the ground ball king. He could hit that ball. They could hit the ball right into the ground, and didn't strike out many, but he won. He won 290 some games in his career. Didn't quite make 300. But sure, and not only that, but he never changed from the time he was in Terre Haute. He was just the same nice kid that he was that we grew up with. I mean, he just was just a really super nice guy. My mother taught his mother how to make pasta because they loved Italian food. And so one day she showed up at the house, at Tommy's house and spent the day with her teaching her how to make, certain dishes. And they're pretty easy once you see somebody like my mom doing it. Let's get back to talking about the markets. You don't want to listen to all that stuff. Anyway, the VIX index is telling you that this was no big deal. I mean, compared to what happened in January, you can see that there was really no big deal. Part of it is that we don't have a lot of participation like we did before. There's just not that many people involved in the market. And I believe, and I've always felt this, that when the next crash, if it does come, will be related to the bond market and not to the stock market. The stock will be incidental to it because it gets all the news, but I believe the big problem will be in the interest rate market because so many people have, done some of that stuff the wrong way, and that means they usually, end up paying a price for it. So we'll see what's happening. Let's take a quick look here at the gold market. Yesterday we had this big move up, and you'll see here that we completed that ABCD pattern there at the 1.618. They came in at 1230. We're now trading around 1224, something like that right now. If we get above that 1230 level, and we probably will, we'll have to see what happens, because we eventually think we're going to go a lot higher in gold. The thing is, the silver is lagging quite badly. That's the only thing that is a little troubling to me, but I get in my old age, I think I get troubled about everything. So, but you got to keep an eye on that because the fact that silver is lagging, let's just take a quick look at it here. You're going to see how badly it's lagging here because it's really quite phenomenal actually. You can see the gold, which is in the gold chart color, that went up and cleaned out all the highs going back to September. And you'll notice that we didn't even take out the highs of October, early October. We got up to a 61% retracement of that in the silver. Whether that's going to be an indicative of some weakness coming in, I don't really know. But the fact that they didn't go along together is usually something that we should pay, some attention to. At least that's what they tell us. Now, one of the folks talked to us yesterday, or asked a question about the hogs, and we're just going to put up the December hogs here just to show you that this is the chart from Friday. And what we did was, if you remember, we put a stop at 55 on the hogs, and they went below that yesterday. That basically tells you that they didn't make those last targets up there at the $61 per pound level. And, that's very unusual, folks, because they're in the midst of this supposedly problem with disease in hogs that has affected China, but that doesn't seem to be in effect. With that report that we had yesterday in the grains, which tended up to be a sleepy time report, there was really nothing into it. It was basically a tiny bit positive. But, I still believe from the long-term work that we did just, about a month ago, that we've made some major bottoms here in the in these grains, and they do have a bias to the upside. And we are into the harvesting area now, so we'll see if it's going to be how it's going to work. We'll just have to do, one thing at a time and see if it's going to help. But keep an eye on that because it's going to be real interesting to see. Another one, of course, that was really important due to the weather has been the cotton. And if we take a look at this cotton chart, which I don't trade, but it's actually trading around 77 and change now. It's been here the whole week at the 61% retracement, and that's in the midst of a hurricane. This thing should have really rallied a lot in the midst of all that water that it got down there, because that part of that is right through the cotton country, and that would have been, really been pretty nasty, I would think, but that has not happened so far. So we'll keep a, close eye, on that one as we're watching. The corn is still acting relatively well. We backed off just a tiny bit. We're now trading at around 670 in the corn. So we'll be looking at there. Thanks a lot, Mr. Z. The cotton's moved up to 77.95 with the last of 78.80. So it's had a pretty good move here. It's moved 2 cents off that bottom, which is good. If we look here at the corn, we didn't get anywhere near that low in the corn. The corn only got as low as 64, and then it's popped up above, trading above 70, 370 3/4. That's pretty much telling us that you've got a pretty good chance of, you know, these markets moving higher. The only one that is still outstanding here, for it's like the farmer, a man outstanding in his field, is the wheat. The wheat has a pretty good chance of making the 504 level. We got to 506.5 last night, and we didn't. Then we turned from that level. So keep an eye on the wheat at that spot. That'll be a very interesting one, you know, to take a look at also. So those are just some of the ones, you know, that we're watching here this morning to keep an eye on. So 877-927-6648.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartleys, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, we're back, folks, and I need to do a little housework here for a second. All the beepers are going off this morning. See what's going on here with some of these things. Okay, all righty. We're going to take a quick look here at this Dow Jones E-mini on the daily, you'll notice we made that 61% retracement. The other one that we showed was an updated one, so we're going to keep an eye on that just to see what happens with it. And we want to talk just a tiny bit of time here on the crude oil because we believe from just the charts that we had last week that we hit a major spot here in the crude oil complex last week, up around that 77 level. We're trading, below. Well, we're trading right around 7,100 this morning. That's down about 9% in just the week. But we did have that 3 drive to a top pattern. You can see that there on the weekly chart. That was a perfect 61.8% retracement, right on the money. I mean, it was just spot on, and it really has had a pretty good sell-off. So if what you'd want to do now, if you miss that top, the thing to watch for is to keep an eye on an hourly or a 30-minute chart and watch for a nice ABCD correction. That's what I would be looking at if I were doing that. So keep a close eye on that. That's something that I think is important. Now we have another market that is jumping around this morning that we've been talking about for quite some time, and that is the euro. We want to get this up and take a look at it here because we got up last night. Just 1 second here so we can put it up here. We did get up to the 116 level, 116.05, I believe. That was just a little above the 382 retracement. We're trading about 50 pips under that right now. Whether that's going to be much of a correction or not, we'll have to wait and see. Folks, the one thing that we're seeing now, and believe me, as most of you know, I stay up all night sometimes trading. Not last night. Last night, the old boys got me into the old mode of sleeping a little bit. But we're seeing huge swings. I mean, 20, 30-point swings in the S&P, sometimes within a 2-hour period. Those are big moves. We hadn't seen that on the way up. And we had a couple of big days, but not big swings. Like yesterday, I believe the S&P swung well over 150 points up and down. And they're hitting the fib numbers. They're hitting the patterns really nicely. But unless you see that overnight when you get up, you might miss some of it. So sort of keep an eye on that. It's a very interesting situation that you've got going here, and it's going to be quite interesting to see if it continues, doing that. And I believe that it will, because the volatility is certainly increasing. But the other thing that's increasing is the fact that we're seeing some huge swings that bring that volatility. Well, that's defined what it is. So we'll do one thing at a time. Okay, let's just watch that very, very closely, because I think we're going to be at an area to do it. Now, we got the crude oil trading at around 71. Let's just do this right now together, because this is what I'm watching, and maybe you want to watch it or not, I don't know. We'll just put this up here. But we do have a possibility of our first legitimate ABCD correction here from the move that we made here recently. Let's just get this here. There we go. We can do that and put it in here and chat a little bit about it. Here is there's your first ABCD correction. If you look at the time frame between the 8th and the 9th, you'll notice that it rallied well over $1.50 a barrel. This would be $1.50 a barrel also. If we look at this on a little bit longer time frame, you'll be able to see the big pattern that we had in crude oil that told us that this is what we were looking at. Now, there's a lot of lines on this chart, but they all tell something, and that's why you have them on there. This is a 4-hour chart, which gives you 6 months, so you can see that we came down, and when we hit that 61% retracement from the low in September, that came in, right at 70.50, and we've rallied, well, 70.60. We've rallied about 90 cents off of that. So the last time we had a good rally in this, which was several days ago, we rallied from 73 up to 75. That was $1.50. So watch for $1.50, correction. And if it's bearish, it's going to most probably go down. That's the $64 question, if in fact it does. It's we don't know if that's going to happen, but that's what it looks like. From early this morning. So we'll keep a close eye on this as we follow it through the rest of the time here. I've got all of my beepers are going off. 1 second here, folks. I've got to do a tiny bit of housework here. Otherwise, I don't want anything to get in my way. One of the things that we were doing last week, of course, was there we go. Now we got these things moving here just a little bit. Let's see where we are. We were looking at that natural gas contract. Those of you that sold that natural gas up there at the 335 level, that's working okay. It's trading around 319 right now. And whether that continues in that direction or not, you know, we'll have to wait and see. I got a question about the chart that I posted from my book, Astro Cycles, A Trader's Viewpoint. Folks, all I'm looking at is a similarity of cycles that happened then and now. They happened 31 years ago. Whether they're going to happen again or not, I don't know. But the chart pattern has lined up very, very similar to that. We don't have anything like the harmonic convergence that we had on August the 25th of 1987. It's nothing like that. But we do have some other topping patterns from all the patterns that we've seen in all these stock indices over the weeks, making three drive to a top pattern, double tops. I mean, there were just so many top patterns that telling you that just be careful in here. And we're going to most probably, you know, see more and more of it as we go through, you know, looking at some of these charts each day that we look at these, because they're quite interesting. Now, one of the charts that looked really interesting last week, of course, was the dollar yen, and we want to get this up here to remind us that we hit that 61% retracement 1, 2, 3, 4 times. But on this time, last time, it was not a 61% retracement. It was a 78% retracement of the high, because we made three drive to a bottom pattern back in March. Then we made a three drive to a top pattern last week, and we got down to the 112 level. We dropped over 2 handles in that. That was part of the reason for the big sell-off, I guess, in the market, because the Japanese stock market, as we showed earlier, got hit really badly also. I do not believe that we're in a trade war, whatever the people talk about. It is not really a trade war. It's more of a skirmish, and I don't think it means that much difference. The stock market sold off because it was just very, very overbought, and there was a lot of complacency in the market. And whether that's going to mean very much or not, I don't know. Someone's asked a question about Facebook. We posted this chart several times here. We'll put it up here again. It was a buy down there because you completed the ABCD pattern very, very nicely. And if you really want to see how nice it is, just look at the 0.3 down to the bottom. If you'll notice how many days it was down 10 days. If you look at the 0.5, it was 10 days down into the other bottom, and that's ABCD coming in at 151. And I believe that Facebook is trading quite a bit higher than that this morning. But whether it continues to hold that level, you know, we'll have to wait and see. 877-927-6648. We'll be right back.
Hi folks, this is Tom O'Brien. If you'd like to be the bank and get the type of interest they receive instead of the low interest rates they give to clients, then I have an investment you may want to take a look at. I'm offering 4-year secured first mortgages on buildable city lots in St. Petersburg, Florida. The investment can be anywhere from $30,000 to $75,000 per buildable city lot. The interest paid is 7% per year, paid monthly. Depending on the investment, the income per month per lot ranged from $175 for a $30,000 investment to $437.50 for a $75,000 investment. If you are in the CD market, you want to look at this investment. St. Petersburg is located in Pinellas County, which is the densest county in Florida. If you're looking for an investment with your principal intact that pays a good interest rate, this may be for you. The supply is limited, so act now. For more information on these secured first mortgage opportunities, you can call me at 877-518-9190. That's 877-518-9190.
Jason Path has just launched his weekly newsletter, The Quantitative Edge, available only at TFNN.com. Right now, you can sign up for Jason's outstanding weekly report, including midweek updates whenever warranted, with a 30-day money-back guarantee included, so you have nothing to risk. Jason develops his trade recommendations by creating an ensemble of predictive and mathematical models trained on data by leveraging a variety of techniques, including market-based computer simulations. Jason then combines these sophisticated predictive and analytical models with deeply researched macro outlooks to identify opportunities in a number of different markets for traders to act on. Whether you're looking to trade futures, equities, commodities like crude oil and gold, forex, or cryptos, Jason covers it all. Sign up for Jason Path's weekly trading newsletter right now by visiting the front page of TFNN.com, and you'll find the Quantitative Edge under the Newsletters tab. TFNN.com, educating investors. Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Directions Daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
The Bull Bear Binary Option Hour, brought to you by Nadex. Next on TFNN.
Okay, folks, we're back, and what we're going to do now is take a quick look at the chart that I just posted, and I can't remember which one I posted. Ah, shucks! Somebody help me out here. I just posted the chart. I'm trying to do multitasking, folks, and it's not as easy as I would like to think that it is. So let's just save that for just another day. Hold on one second, folks. I have orders that I have to double check, so just bear with me here, and I'll be right with you in just a second, and then we will be okay. Hold on one second, and there we go. Just I think we may have a caller calling in, possibly. The banking index. Thank you very much, Marshall. I really appreciate it. Yes, the banking index was one of the things that tipped us off that there was problems out there. The earnings for the banks are coming in, but remember, that's the stuff that happened 3-4 months ago. I don't believe that's going to be the same as we get through this a little bit later. So sort of keep in mind that these things do change, but this chart is extremely bearish. We couldn't make newer higher highs, and it's something that you want to sort of pay attention to, because it's very, very important as far as where the money is going, and that's the key to some of these things that we're watching here. So watch this banking index. That's just one of the factors. Remember, I counted them off yesterday. There were 11 of them that I thought was, very, very important and why we had this move, and it's just starting. And I believe you're going to see October as be one of our busiest months as far as volatility. The other reason is the fact that October has the highest number of lows made in all of the stock market going over 230 some years. October is the one month that stands out as the one that has more lows than any others. That doesn't mean it happens all the time. It just means that it happens some of the time. That's the key thing to keep a close eye on. If we take a look at this Canadian dollar, we're up in this area where I think you could have a really good place to get a retracement up here. We got into that 130 area, and I believe this is still in a downtrend. It would give us some more room to the downtrend. And remember, we did cover the short Australian dollar on Monday, right near the low. We actually missed it low by about 10 pips. It's rallied about 100 pips off that bottom, but that's a pretty significant low in that Australian dollar. And I'll bring this chart up to let you folks see it, because we got up to 172 yesterday, I believe, but we did get right down to that number we were looking at right near the exact 1.27 expansion, and it was a really nice. Nice trade. Anyway, someone asked a question about the grain markets. Excuse me, about the livestock markets. You want to be able to. This is the cattle. We just get the cattle up. You know, we had a tremendous move in cattle. We have a lot of help in cattle because of Mr. Z here at TFNN is an incredibly adept cattle trader. Plus, we have a Rich Anderson who comes on and it gives us some ideas in cattle. We had a big ABCD pattern. That was a triple top in cattle up around the 119 and change. We shorted that. We covered it yesterday at the 116.50 level. We're trading about that level right about now. So we view that as a completed trade, and then we will look at it in a few days to see if there's another pattern that either allows us to go either long or short. Remember that we don't do anything with fundamentals, folks. Everything that we're doing here is related to price patterns. There's no oscillators involved at all, no moving averages of any kind. They're just price and time, looking at patterns that give us a probability of being right or wrong. And what it does do is it quantifies the risk. We never know where they're going to be right, and we know we're going to be wrong some of the time. So the one thing that we can control in the risk-reward equation, of course, is the amount of money that you're going to risk, and that's what you have to be looking at. The other thing is when you're trading, folks, you should never risk more than about 2% of your trading account. So let's say you had a $100,000 trading account, 2% of that would be $2,000. That would be your most risk. But, if you're starting out with a small account of about $5,000, 2% of $5,000 is only $100. So you can't do it that way. That's one of the reasons why people that when they start out trading, they don't complete it very well because they're undercapitalized. But if you can keep your losses on a $5,000 account, keep them to around, $300 to $400, you're going to get about 10 opportunities to see if you're going to be right. And of those 10, hopefully you're going to be right about 5 out of the 10, and you'll make more money on the 5 that you win than the 5 that you lose. Those are important things to keep in mind, and it's very important. The most important thing, too, is, yes, being well capitalized, Mr. Z is correct. The other thing is you've got to develop the trader's mindset. You've got to think in terms of, one of the things that I talked about in the book, The Essentials of Trading, it's not what you think, it's how you think. And that's important, too. You got to think about how you're thinking. You want to think in terms of, being a winner and not worrying about, the next trade being a winner or loser, because it's all based on randomness anyway. So the market is basically chaotic, folks. But within that chaos are these non-random patterns. We've seen these day after day as we look at these things in these charts. And believe me, that's what they are. They're just nothing more than charts. No moving averages, just charts, and that's what we're watching. So anyway, we'll keep an eye on that. That's something I think that is relatively important to do. See, the stocks this morning sold off just a tiny bit, but they're holding their own. The euro is still weakening a little bit, which makes me quite the happy boy because we sold some of that last night up around that 116 level, and it's doing okay. And anyway, we'll watch these as we go through here. Let's take a quick look here at the U.S. dollar index, because that's one of the ones that is controlling this whole thing. We had, and this is not up to date, folks. This is from a week ago, Friday, last Friday, and I believe we're trading right up at that same level again, right around that 95.50. So that tells us it didn't back off very much. And after that big ABCD that we had here a week ago, that is very bullish. I.e. bearish the euro. So we'll see if that's going to hold, but it's certainly acting like it wants to really do really good. Someone asked the question is, why in my newsletter do I repeat certain charts? And the reason why I do is especially charts when I'm using comparisons of divergences and things like that. If I put it in more than once or twice, it's because it's that important. I put that Dow Jones monthly chart in there the last 3 weeks in a row to show you how important that was, and now we're seeing why. So when you see those in there, that's the reason. It's the fact that they are very, very important. I brought the attention to the fact that the new highs to new lows was diverging very badly, and the advanced decline line was very badly. We had Arch Crawford on last week talking about how bad that advanced decline line was, and it means something. You know, sometimes it doesn't appear that it's going to mean something right away, but over a period of time, that's exactly what you're going to be looking at when you're seeing these. And oh my goodness, here it is already. It's Friday in an up week. We're going to have to take a little break here, and then we will come back, and I believe we'll talk some more. Nobody calling in today. Son of a gun, shut the front door and raise the rent.
I'm certain you are or strive to be one of the best at everything you do in life. It's the most common trait that we tigers and tigresses share. If you're looking to become the best of the best when it comes to managing your money, let me teach you to do what most wealth managers tell you can't be done, which is how to time the markets. I'm Steve Rhodes, author of Mastering Probability, and for the last 12 months, Timer Digest has been tracking my newsletter signals, which have earned me the ranking as their #1 market timer in the nation for the S&P 500 for the last 12, 6, and 3 months. Timer Digest also ranks me as the #1 market timer for gold as well. The fact is, markets can be timed, and I'll teach you the exact set of tools that I use that has transformed me into one of the best at what I do. Sign up for Mastering Probability today by clicking on the newsletter tab on the homepage of TFNN.com and get immediate access to workshops where I take you step by step how to use an extraordinary set of tools as well as provide great market calls too. Sign up today.
No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters. Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, folks, one of our listeners is asked to share the pattern that I was looking at intraday. It's a 15-minute chart on the E-mini S&P. Last night, right on the close, the market being down 535 points, we were completing a 1.618 expansion of the range between October the 11th, and that was a beautiful ABCD pattern at that point. From that time last night, if you just did the work, you'll see that we went up and made a beautiful ABCD pattern at the 78% level, actually coming in at 0.84, within about 3 points of the exact number. And what we've done so far It's just had a little bit of a bounce here and there. So we'll see if it's going to mean very much. I'm not sure. What I would be watching today, because I think that we are in the midst of this, is the 382 retracement of this big move comes in at 27.58. So as long as we can hold 27.58, we've got a pretty good chance of this market rallying a few more days. My ultimate target on this move is somewhere around 2,500. Whether it's going to get there or not, you know, we certainly have to wait and see, but we'll do one thing at a time. That's really what we're looking at. So we're paying attention here. I happen to be watching a couple of things here today that look interesting. I'm really keeping an eye on this crude oil, because I think if we got a chance to get up that ABCD pattern, it really looks like really interesting. I'm going to be sending a video out on it later this morning. So kind of keep an eye on that crude oil. That's got, you know, broke 9% in 1 week. That tells you it wants to go lower for sure. So just keep a close eye on it. That's basically what we're looking at here, and then we'll move on to the next one. Someone's asked a question: how high do you think the S&P is going to go? It will go until it's finally reached its high. On this particular swing that we're looking at 28.31, and that's it. I'm done.
Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get 'em, folks.